everyone, and thank you for joining us for the Optimize Weekly Market Recap. My name is Matthew McGraw, President and CEO of Optimize Wealth Management, and as always on these reports, we'll be looking at recent market events over the past week, as well as what to expect for the week to come. Stock markets in the US exhibited very strong performance this past week, while Canadian stocks remained relatively flat. The Nasdaq was up over 2%, the S&P added 1.8%, the Dow over 2% as well, while the TSX was relatively flat at only 0.52%. The strongest sectors were clearly technology and consumer discretionary, whereas the weakest ones were energy and consumer staples. Clearly, investor confidence is moving towards some of the more growth-focused names and growth-focused sectors, a sign that investor optimism is certainly on the rise. In terms of this past week, Stats Canada reported on Wednesday that our economy grew at an annualized rate of 3.1%, well ahead of expectations. The outperformance was driven by growth in exports and household spending. However, having said this strong growth will likely increase the probability of additional rate hikes. But this is something that we'll be watching this coming Wednesday when the Bank of Canada is expected to make its next interest rate announcement. Most noteworthy, however, is the increase to the debt ceiling has finally been passed, paving the way for higher equity markets, best seen in Friday's 700-point surge on the Dow. Thirdly, and lastly, Friday saw the US adding over 339,000 new jobs in May, significantly higher than the forecasted 190,000. All of this is pointing towards considerably higher than previously reported reports, and underscore the resilience of the US economy despite the steep rise in borrowing costs that we've seen over the past year. Looking ahead this week, first off, we'll get updated unemployment numbers for both the US and Canada on Thursday and Friday, which will provide a great indication as to how healthy the labor market remains. Secondly, and as mentioned, the Bank of Canada will be announcing its interest rate decision on Wednesday, and although no rate hikes are expected, certainly its guidance will be well followed. But most importantly, next week will provide a great indication of where the markets are headed now that the debt ceiling discussions are well behind us and the recent job report has pushed investor optimism much higher. Overall, could not have hoped for a better response in the markets to the debt ceiling resolution, and what a better way to head into next week. In the meantime, enjoy your week and see you soon.